Welcome to Capital Currents, where the flow of business news and market trends keeps you ahead of the tide. I'm your watchdog, and today is Thursday, June 26th. In today's episode, why more companies might start IPOing soon, then Tesla struggles in Europe. Finally find out why a company that lets you bet on the weather just raised $200 million from Peter Thiel. The markets continue to rally on Wednesday as tensions in the Middle East have cooled off, and the S&P is within 1% of all-time highs, and the Nasdaq index hit all-time highs yesterday. The only people not having a good time this week are oil traders because oil prices continue to fall. Prices were down 5% on Wednesday to $65 a barrel. It looks like the market has pretty much moved on from the Israel-Iran conflict, and investors don't seem to be worried about tariffs either. Speaking of tariffs, remember the 90-day pause back in April? That pause is expiring on July 9th, and so far, there hasn't been any major trade deals announced. Looks like the markets expect Trump to extend the tariff pause as they work through these trade deals. Let's run through some headlines. According to a report from Reuters, the SEC is in talks with Nasdaq and the New York Stock Exchange to roll back some of the red tape around going public. The goal here is to make the IPO process less painful and less expensive for companies, so that more private companies actually list themselves. While the IPO market is starting to heat up again, we've seen companies like Circle and CoreWeave go public recently. We're still way below from historic levels. There are currently around 4,500 publicly listed companies, which is down 36% from the year 2000. This actually has a tangible impact to everyday investors because some of the most valuable, innovative companies in the world, like OpenAI and SpaceX, are still private. That means that regular investors like me and you can't invest in them and benefit on the upside. Basically, they're trying to reduce the paperwork and the drama, and hopefully it results in more companies going public sooner. Now, of course, there are trade-offs, right? Less regulation could mean more risk for investors. But these days we live in a world of meme coins and zero-day options and triple-levered ETFs. So retail investors are already used to the risk at this point. So I'm hoping that these changes go through soon and innovative companies feel comfortable listing. Let's shift gears and talk about Tesla. Tesla continues to struggle in Europe. New data shows that car sales in Europe fell by nearly 28% in May, which marks the fifth straight month of declining sales in the region. But what makes this worse is that this happened while EV sales across Europe actually grew by more than 27%. The demand for EVs is clearly there. Teslas are just not getting any love. Most of the EV demand in Europe is being met by Chinese EV makers, which sold nearly 66,000 cars in Europe last month. Tesla, on the other hand, sold just 14,000. Polymarket is set to raise $200 million at a $1 billion valuation. This round is being led by Peter Thiel, and it adds to the $100 million in funding that Polymarket had previously raised. Polymarket is a relatively new company, and it's gone on to become the biggest prediction market platform in the world. Last year, over $8 billion were wagered on Polymarket, most of that centered around the election. Volumes on the side have slowed down since the election, but the company is still capitalizing on the momentum. Volumes in May of this year was $1 billion, far outpacing the $63 million in volume they had from May of 2024. Just for some context, DraftKings, the sports betting company, has a $20 billion market cap right now. So I think investors are hoping that Polymarket could become that, or even bigger. That's all the business headlines I have for you. Let's take a look at some stocks. Bumble shares are buzzing today after the dating app announced that it's cutting 30% of its workforce. Wall Street likes this move because it's expected to save Bumble around $40 million a year, which the company says it'll reinvest into building new products and tech. Bumble dropped more than 35% over the past 6 months, and the stock is down over 90% since they IPO'd back in 2021. Shares of Bumble are up nearly 17% this morning on this news. FedEx stock is down today after the shipping giant warned that profits for this quarter will fall short of expectations. The company actually beat earnings and revenue expectations for last quarter, but the outlook going forward is not so great. The company is blaming weak global demand and ongoing uncertainty around trade policy. Tariffs alone are expected to wipe out $170 million in operating income this quarter for FedEx. FedEx stock is down 5% this morning in reaction to the earnings. That's all for today's show. Keep navigating those waters and see you tomorrow.